Hi, and welcome to Simple Sales Structure. My name is Oluwadamilola Israel, popularly known as Zoe. I'm the founder of Zoe Chop Life and Zoe Bakes. In this course, you'll be learning simple techniques to record your sales. This is a problem that I have also experienced myself in my business, and in this course, I'll be showing you how I was able to overcome it. Many things determine the growth of a business, but sales top the list of them all. The game of business is the game of numbers, but sadly, many businesses do not know their numbers, which is the reason why we'll be discussing why most businesses don't know their numbers. Number one, no proper recording system. Let's use Mrs. Margaret for example. Mrs. Margaret owns Margaret Clothings. Margaret Clothings is a boutique store that sells boo outfits, that sells crop tops, jeans, and many more. But if you ask Mrs. Margaret, how many crop tops did she sell in 2025? Mrs. Margaret does not know. She does not know because the sales were not recorded properly. She does not know how many crop tops she sold on Jumia. She does not know how many was sold on WhatsApp. She does not even know how many she sold on Instagram. Why? She just see money in her account, but she cannot give accurate data of each product that is sold in the boutique. And this is the situation of many businesses. Number two, why businesses don't know their numbers is because they focus on sales and not profit. Many times as business owners, we tend to forget or we are too lazy to calculate the cost of production per unit of our product. For instance, let's use Shola as an example. Shola owns a barbecue shop that sells fish for like 5,000 naira each. He focuses on adverts, he does TikTok posts, he dances on TikTok, he dances on Instagram just to make his target sales per day, which is to sell 50 fish per day. And don't forget, 50 fish totals to how much? 250,000 naira. But unknown to Shola, the cost of buying the fish, the cost of pepper, oil, gas, fuel to run that barbecue business totals to 4,800 naira per fish. And he was making how much again? He's making 250,000 naira per day. But because of the poor pricing, as a result of not calculating his profit, he ends up making 10,000 naira profit per day. So Shola keeps asking himself, where is the money I'm making going into? So if you are listening to me now and you are also asking yourself this same question, it is time to start focusing on how much is your profit and not just your sales. Number three, why businesses don't know their numbers. They mix business money with personal money. If you are a startup business, this is going to be quite difficult, and I understand. What you can do or decide is that you can say, okay, a percentage of your income is what you will be using every month for personal purposes. It is like paying yourself salary. So let's say your monthly income in profit is about 200,000 naira. You can decide that only 50,000 naira will go into personal uses. So that way you have 150,000 naira that goes back into your business to facilitate your growth. Number four is cost implication. Many of these systems or software for record keeping are very expensive. And for small businesses, the cost implication can be weighty on the business, which is why the system we'll be looking at in this course is one of the most affordable ones. Number five is inadequate knowledge. Many people think that they need sophisticated gadgets like monitor system, like big printers and other expensive gadgets just to have a POS system. So if you are in this course, I congratulate you because I'm going to teach you in few minutes what took me years to learn. The next topic we'll be looking at is the danger of selling without tracking. Number one danger is that theft will be undetected in your business without being discovered. Number two danger of selling without tracking is that you can't make data-driven business decisions. Data determines growth in businesses in a lot of ways. Now let's go back to Mrs. Margaret Boutique. If she was able to analyze how many crop tops she sold, she would have been able to make decisions with answers to questions that can triple her income. Questions like, what colors of crop tops do they buy most? Questions like, what platform give us the most money? Questions like, what designs are customers not buying? All this data will be fact checked, and she will be able to know where exactly to focus her energy in the business to make more money. Another danger we'll be looking at is that you will be missing out on growth opportunities like grants. We all love to access external source of funding like business grants, right? But many grant opportunities will elude you if you don't have data for your business. This is why many businesses don't get shortlisted even when their application and other things were perfectly done. Another danger is that your business will rely solely on guesses instead of facts. If you keep selling without tracking your sales, you will keep guessing what to do instead of knowing what exactly to do. You will keep guessing your sales number, you will keep guessing your inventory numbers, and it is dangerous to guess in business. You have to be factual. Another danger is that you will be making sales but don't know if you are making enough sales to make profits. So there's something called operational costs in business, and this is the amount it takes to run your business daily. This operational cost includes the total of your rent, labor, staff salary, and many other things like expenses like maybe raw materials and all of that. When you total this amount and break it down into daily cost, that is your operational cost. So if the profit of the sales you make per day cannot accommodate this operational cost, that business is on the verge of closing up. But with proper sales tracking, let's say you own an Ankara store that sells Ankara at 20,000 naira per bundle and operational cost per day is 100k, you will know that you need to sell at least 10 Ankara per day if you are going to sustain that business. The last danger of selling without tracking is that the business won't be able to scale properly. If you are not recording right, you will keep looking for external funds to scale your business without sitting down properly to analyze how much you can play the game of numbers in your business to raise the money that you need to scale. Our next topic right now is how money leaks happen in businesses. Money leaks is how businesses lose money without realizing it. So number one on our list of how money leaks happen is staff theft. This year alone, I personally know about 3 businesses that posted their situation on staff theft. Staff theft has ruined many businesses. Staffs keep taking money, they keep stealing inventory, and even using their personal account to receive payment without business owners detecting until the business crumbles. Many businesses that were able to detect staff theft in their business is as a result of the sales system they've integrated. And this is why in this course, you'll be learning how to track your inventory and many more. Also, another reason how money leaks happen is uncontrolled expenses. Uncontrolled expenses is when you keep buying things that you don't need or overbuying what you're supposed to buy in bits so that you can keep cash at hand to run your business. Another thing that I would suggest is that aside recording your sales, also record your expenses. Record everything and always track your receipts. When you ask your staffs to go get anything, make sure that they are accountable. They bring back receipts and you see exactly where the money went into. This way, leakage will be reduced. Another way by which money leak happen in businesses is inconsistent account reconciliation. Accounts reconciliation is simply put the process of checking and balancing your account, making sure that what was sold was actually recorded in transaction and making sure that what is left over is recorded in inventory. Now, this is a mistake many businesses make. They think that setting up cameras and sales system is all they need to do. The truth is, after setting up a proper sales structure, you must have a system of daily or weekly account reconciliation in your business. My own advice is that you do it daily. Number 4 on how money leaks happen is no sales record. Recording your sales daily on a software is one major sure way to help you to minimize money leaks, and that's why you are in this course. So number 5 on how money leaks happen is waste or poor inventory management. You must have an inventory system that makes it easy to track your inventory and manage waste. And the most common inventory system is LIFO and FIFO. LIFO simply means last in, first out. This type of inventory system is perfect for those that sell non-perishable products or trending products. For instance, people that sell clothing like collections, like all those fashion designers that always sell their latest collections. So they want to market their last products, their last created collections before selling their earliest collections, which they probably use to run discount sales. If you sell perishable goods or consumable products like food, like yogurt parfait, like yogurt, like juice, The best inventory system for you is first in, first out, both for your raw materials and for your end product. All these things have shelf lives or expiry dates, so you want to make sure that the ones you produce first or the ones you buy first are the ones that are immediately used or sold out, to prevent money leaks or wastage in your business. Our last point on how money leaks happen in businesses is pricing. One of the reasons why you should always record your expenses as much as you record your sales is in the case where expenses increases, your pricing also should increase, so that money leaks will not happen in inflated expenses while you are selling at the same price. After taking this course, let me tell you what will happen. You will have a mindset shift from being just a seller to a business owner, and these are the highlights I want you to take home from this course as a business owner with a proper mindset shift. Number one, you just don't need to sell, you also need to understand your numbers. Number two, you need to also understand your target market. Who are the people that can afford your product? Who exactly are you selling to? Number three, you understand that cash flow is not profit, so you will sit down and cost your product per unit to know how much exactly is your profit. Number four, you move from staff trust to proper structure. Number five is that you build systems that can work without you. And the last one is that you understand how to use your data to grow your business. So I'll see you in the next module.